Now, this is the pro forma of company's balance sheet. In case of class 11, we prepared balance sheet. For that, there is no rules and regulations. But in case of companies, means we had to follow the pro forma which is given by the Companies Act 2013 and as well as 1956 also. Here, you will have these columns. One is particulars. Then second one is note number. Note number stands for it is nothing but only rough work only. Whatever the rough work we are doing separately, for that we have to give particular note number. Then this is figures at the end of current year and previous year. Current year is position we have to write, and if we are getting the figures of last year, means we have to show the figures of last year. So generally, no one is giving the figures of the last year. But what is the intention of giving both the figures? Once we are having current year amount at the same time last year amount also, we can have a comparison. For the purpose of comparison only, they want to display the columns of current year and the columns of the last year. Now you see, this is the pro forma. First one equity and liabilities. Then under this main head, the first one shareholders funds. Then under this share capital. Against equities you write 01, means working notes 1 is nothing but note number 1. Now simply here I am writing 6 lakhs. So how I got 6 lakhs? For this I have to show the working notes, which is called as note number. To show the note number, this is the pro forma. Note to accounts, then particulars, rupees. Here it is required to show all the different types of capitals. Whatever the types of capitals, just now I explained you. These three ways is very, very important. First one is the average capital. Then according to my example, 1 lakh shares at the rate of 10 each, that means 10 lakhs. Average capital will not be considered in case of taking the total. Then second one is issued capital. Of course, the company is having the power to issue 1 lakh shares, but the company is issuing only 60,000 shares right now. 60,000 shares at the rate of ₹10, that is 6 lakhs. Now, the third point which is very important, that is subscribed capital. Subscribed capital, again it is divided into two ways: subscribed fully paid up and subscribed but not fully paid. As it is first example, I took only fully paid up portion only. Here I assume that all the 60,000 shareholders they paid the entire 10 rupees round fee. That means 60,000 into 10, that is 6 lakhs. So here whatever amount here I am getting, I have to write the same amount here also. So this is the way to show the company's share capital in the given balance sheet. Issue of shares by the company. The company can issue the shares in terms of two types. Issue of shares directly to the public for cash. This is the first one. And the second one is issue of shares for consideration other than cash. This is second one. Here only it is directly given. The main mode of issue of such kind of shares is not to get the money. Later I will explain this one. Now this is issue of shares to the public for cash. This is purely getting of the cash directly from the public. Here also suppose, say the company is issuing 1 lakh shares. Each share value is 10 rupees. If the company wants to get 10 rupees in lump sum in one single installment, that is comes under receiving the whole amount of the share amount in lump sum. That means getting the amount only one time only. But in normal cases, in many cases, the companies they want to get the entire amount in different installments. This is installment. Here also some amount the shareholder has to pay some amount at the time of applying the shares, and some amount at the time of allotment of the shares, and some amount at the time of calls. Calls may be share first call, calls may be second call, maybe third call, or maybe final call, like that. But here one rule is there: the application amount should not be less than 25% of the share value. That means, suppose if the share value is 10 rupees, means 25% of 10 rupees means 2.5, 2 rupees 50 paise. That means the application cost minimum of 2 rupees 50 paise. But generally the companies may demand from the customers, from the members, the member has to pay 3 rupees. So this is one of the legal constraints. This is one of the rule. giving money to them. Simply what the company is doing, whatever the shares they are having in their hands, they want to give the shares to the vendors. That is this one. That means issue of shares to the vendors. Generally, for companies, underwriters they are giving many kinds of services. For underwriters also, the company has to pay some commission, underwriters commission. In place of paying the commission, sometimes the company may issue the shares to the promoters. So this is the different types of issue of the shares by the company.